For the third time in as many months, Cathie Wood's iconic ARK Invest Fund has made a bold acquisition of Tesla shares, purchasing roughly $11.7 million worth of shares across 3 of her exchange-traded funds. This occurs at a time when investors are becoming increasingly concerned about Musk's antics on Twitter, as Tesla's stock has experienced notable ups and downs in recent weeks following a very poor 2022. Why, though, is Wood so focused on Tesla? In a special interview, Cathie referred to Musk as Tesla's Renaissance man and alluded to the company's competitive advantage. In Wood's future, Tesla's stock price will have risen to a point where ordinary investors will not be able to purchase it. We'll explain why you need to enter as soon as possible in this video, but first, hit the like and subscribe buttons. For the third time since October, celebrity investor Cathie Wood has taken control of a substantial chunk of Tesla stock after the company's latest decline to its lowest point in more than 2 years. It's important to remember that Tesla's stock had already dropped more than 19% in December and almost 55% year-to-date when Cathie made her buy. In 2022, ARK had lost 64% and more than 13% of its value. A daily transaction report sent by email indicates that Wood's ARK Invest paid an estimated $11.7 million for 74,862 shares of the electric vehicle manufacturer spread across 3 of her exchange-traded funds. 2 such funds are the ARK Autonomous Technology Robotics ETF and the Next Generation Internet ETF. After Zoom and Amazon, Tesla is the 3rd largest stake in ARK's financial products portfolio. In Cathie's opinion, Tesla represents the greatest substitute for vehicles made by conventional automakers. With its colorful and occasionally erratic creator, Elon Musk, leading Tesla, has altered the century-old vehicle industry in just 16 years. While Tesla operates with agility and creativity, traditional auto companies are finding it difficult to stay relevant in a world that is more focused on software. Their size and bureaucratic structure also cause them to be reluctant to adapt to client requests. These businesses have a distinct culture from software companies and rely on lending money to customers to increase sales. Rather than being a traditional car maker, Tesla's rate of innovation in the high-end vehicle sector is more akin to tech titans like Google and Amazon. Its remarkable market valuation acts as a cautionary tale to other automakers, informing them that in order to stay competitive and relevant in the market, they need to create creative business models akin to Tesla's. Although Cathie acknowledged that other automakers like VW and BMW have made notable advancements recently, she emphasized that Tesla still outperforms them in terms of power and range. Tesla's inventive electric cars and state-of-the-art technology have upended the established auto industry. In the market for electric vehicles, Tesla has a distinct advantage over other automakers. They were among the first manufacturers to offer elegant and useful long-range electric cars, and they still set the standard for range and battery technology. Furthermore, Tesla has made significant investments in autonomous driving technology, which has the potential to completely change the auto industry. Tesla has been able to move faster and more nimbly because of their focus on these areas, even though other automakers are also investing in electric vehicles and autonomous driving technologies. However, as more automakers like Ford, General Motors, and Volkswagen step up their attempts to create electric vehicles, the market for these vehicles is becoming more competitive. Wood asserts that unless automakers want to incur losses on their vehicles, they will not be able to match or compete with Tesla's combination. When asked what she thought about big businesses taking on Tesla in the electric vehicle market, she stressed the value of range and performance. In mid-October 2022, another ARK executive gave a positive statement about the top EV maker in an interview with CNBC. Tasha Keeney provided an explanation of ARK's extreme optimism for Tesla in a recent interview with Yahoo Finance, saying, "I'm increasingly convinced that Tesla's innovative business model poses an existential threat to the entire automobile industry." As co-founder and general partner of venture capital firm Andreessen Horowitz, Mark Andreessen observed in a landmark essay in 2011, software is eating the world, which contributes to this. Tesla has a major edge over traditional automakers in that it is a software company which has contributed significantly to its success. These conventional businesses, in my opinion, are ill-prepared to compete in the software-driven world of today. They are not as fortunate as Tesla, since they are hampered by factors like a scale bureaucracy, slow customer service, reliance on customer financing to promote sales growth, and a culture that is not similar to that of a software firm. As stated by Volkswagen's chairman in the wake of their vehicle emission disaster, the top automakers are aware of this and regard Tesla as a serious rival. The primary obstacle confronting Volkswagen and other automobile manufacturers is their inability to possess the requisite knowledge and skills to contend in the software car era. An industry that has existed for more than a century has been completely revolutionized in just 16 years thanks to Tesla and its occasionally unpredictable creator, Elon Musk. ARK's founder and CEO, Cathie Wood, responded in the negative when asked about Elon Musk's leadership at Tesla, even though investors were worried about Musk's overuse of Twitter. The prospective new revenue stream from autonomous taxis, which are major drivers and account for more than 50% of Cathie's projected EBITDA and 60% of estimated value in 2026, is her secret weapon against Tesla. Calculations indicate that in 2026, revenue from electric vehicles will make up 57% of the company's total revenue, but their margins will be significantly lower than those of robotaxi revenue. ARK now estimates that the launch will occur in 2026, 4 years later than Musk predicted, despite their previous statement that Tesla will never be able to provide autonomous ride-hailing. This is due to their increasing confidence in Tesla's self-driving capabilities. Additionally, they predict that Tesla will launch for-profit autonomous ride-hailing services in 2024. The updated model that investors are using increases Tesla's capital efficiency even further. They predict that in 2025, Tesla will invest between $6,000 and $8,000 for each extra unit of capacity. This is far less than the $80,000 they predicted the year before to get the Model 3 up to speed. Given that Tesla is anticipated to pay between $2,000 and $7,500 for each extra capacity unit in 2026, it is probably safe to infer that capital investment efficiency will be high. Based on the company's most recent model improvements, ARK's bear and bull case scenarios suggest that the value of Tesla stock in 2026 might range from $2,900 to $5,800. If this happens, only wealthy investors will be able to purchase Tesla stock, rendering ownership of the company unaffordable for the typical American. According to Musk, owners of Tesla cars would be able to include their cars in the ride-sharing network, and the business will charge a commission for each journey. Musk has also stated that he anticipates the service to launch as early as 2021, though it is unclear if the business will be able to fulfill this aggressive schedule. It is noteworthy that technological difficulties and regulatory obstacles could cause a delay in Tesla's robo-taxi service launch. ARK predicts that its current fleet of human-driven ride-hailing cars would eventually switch to an autonomous ride-hailing network if Tesla is unable to develop a robo-taxi service. In spite of ARK's distinct and higher price per share requirements and Tesla's primary goal of reaching complete autonomy, the company may still introduce a human-driven ride-hailing vehicle in the next 5 years. Investors and analysts that are bullish about Tesla's prospects anticipate the company to maintain its leadership in the rapidly growing electric car market and possibly even branch out into other renewable energy markets like solar energy and energy storage. Some experts and investors, on the other hand, are more realistic and fear that the company won't live up to its potential and end up being simply another production company. The bears claim that the company is excessively subsidized, overpriced, and susceptible to competition. The estimated stock price range for Tesla is wide. Nearly twice the present value of the firm, $302.50, is the average 12-month price objective for Tesla on NASDAQ. For Tesla shares, the most optimistic 12-month projection is $760. Furthermore, the most pessimistic analysts that follow Tesla predicted that the price will fall to $73 within a year. Views among investors on Tesla's short-term prospects are generally very different. For instance, Cathie Wood thinks that the current drop in Tesla stock represents a great time to make investments. In an interview, Cathie Wood expressed her bullish outlook on Tesla. She thinks that Tesla has a big advantage over other automakers, and if one compares automobiles based on range rather than brand, Tesla comes out on top. In addition, Wood called Elon Musk Tesla's Renaissance menace and expressed faith in his ability to lead and his company's future plans. For the third time since October, Wood's ARK Invest has taken control of a sizable portion of Tesla shares, demonstrating her continued optimism about the company's future despite worries expressed by other investors regarding Musk's diversion on Twitter. Do you concur with Cathie's assessment? Please share your thoughts in the comments box below. If you enjoyed the video, please hit the like and subscribe buttons. In the upcoming video, I'll see you. I'm grateful.